So we're going to do the computation of minimum tax, yes, based on the old provision and the new provision. So we're going to continue the previous question. The year of assessment is 2018 year of assessment. At that time, Finance Act 2020 has not come into implementation. So you're going to use the old provision, and the formula of the old provision is into two. It's a very bulky formula. So if the turnover of the company is more than 500,000, this is the formula you're going to use. You pick the higher of these four variables, which you can see on the screen: 0.5% of gross profit, or 0.5% of net asset, or 0.25% of paid up capital, or 0.25% of revenue. So you pick the higher. This is if your turnover is more than 500,000. Then you will now add 0.125% of excess of revenue over 500,000. That 500,000 benchmark, right? I will solve it. If the revenue is less than 500,000, that is, if the revenue is equal to 500,000 or less than 500,000, this will be the formula, the higher of these four. But you won't add that 0.125%. Okay, so you look at your question. All the rules for minimum tax, have they been met? If they have been met, you now ask, is turnover more than 500,000? In this question, turnover is 112,500,000. So you use the first formula. Okay, so that's 0.5% times gross profit, which is 48,199,800. You also do 0.5% of net assets, which is 21,500,000. And the answer gives you 107,500. You do 0.25% of paid up capital. Paid up capital is 12 million, and the answer gives you 30,000. Then you do 0.25% of revenue. Revenue is 112,500,000, and that gives you 281,250. So you can see that the highest figure is 281,250. Then you now add it to 0.125% of the excess of revenue over 500k. That is revenue minus 500k. That is 112,500,000 minus 500,000. That will give you 112 million, and that will give you 140,000. So you say 281,250 plus 140,000. That will give you 421,250. I'm so sorry, the correct figure is 421,250, not 380,999 like I said. So this is lower than the CIT that was computed in the previous chapter. This is lower, so it means they will pay the higher. They will pay the company income tax. The concept of this minimum tax is that the tax that the company is paying must not go below a minimum tax. I think the logic behind it is that some companies can be so smart to claim a lot of allowances to the extent that their company income tax will be so low, you understand? So the what we calculated as company income tax is greater than the minimum tax. So because of that, they will pay that 3 million naira. But if it was 50,000 naira, it means they can't pay 50,000 naira. They will have to pay 421,250, which is the minimum tax. Now, if this question was 2025 year of assessment, because Finance Act 2020 has changed this long and bulky formula, the formula for calculating minimum tax right now is to just say 0.5% times turnover or revenue minus franked investment income. So what is franked investment income? I'm not going to give definition. I'll just explain what it is. So if a company is receiving dividend, okay, or receiving investment income from investing in another company, that's what you call your franked investment income. So if this XYZ Limited probably bought shares in MTN, at the end of the year they will receive dividend, they will receive income for investing in MTN. That income, right, it is not part of their normal course of activities. They must less it from the turnover. That's the concept, okay? And that income, for you to less it, it must have been taxed. Dividend must have been taxed. Tax must have been withheld from it, okay? So it must have been taxed for you to classify it as franked investment income. So don't forget that minimum tax formula now from Finance Act 2020 is 0.5% of turnover. And in that turnover, franked investment income must not be part of it. Very simple, right? So there's a particular note that you should have. there was an amendment through this Finance Act that companies that are filing or that their assessment year is between January 2020 to December 2021, they should calculate their own minimum tax at 0.25% of turnover minus franked investment income. As in, because of the old transition, the tax authorities just give them like 50% allowance. I don't know if that makes sense. Okay, so that is the end of this question. Thank you so much, guys, for watching, and I'll see you in my next video. Bye.